You finally saved up some money and you are ready to start investing. So you download a trading app and within 5 seconds, you already feel like closing it again. There are thousands of companies to choose from, red and green numbers flashing everywhere. Then you hear people talking about ETFs, index fund, crypto, and real estate. And suddenly something that feels so simple now feels incredibly confusing. Now you are wondering, what am I actually supposed to buy? Which app can I trust? And how do I even avoid losing my money? And if that sounds like you, don't worry, you are in the right place, because in this video, I'm going to simplify everything and show you the exact beginner investing setup I wish someone had showed me when I started 6 years ago. And by the end of this video, you will know exactly what to invest in, which app to use, and how to make your very first investment with confidence. And to make it even easier, I will show you exactly how I invest my own money in a live demonstration so you can follow along step by step. Let's get into it. Now, before we buy anything, there are 3 quick checks every beginner needs to make first. And skipping these could cost you a lot more than picking the wrong investment. Number 1 is pay off any high interest credit card debt or personal loans charging you over 9%. 2, keep a small cash buffer in an accessible savings account for unexpected emergency. And 3, only invest money you don't need for at least the next 3 to 5 years. In fact, I've got a full video on these steps and you will find the link in the description. Now, think of these 3 checks as the foundation of your investing journey. Once they are in place, you are ready to start investing with confidence. So now, how are we going to be investing? Now, when you hear the word investing, you might picture someone sitting in front of computer screens all day trying to predict which stock will go up tomorrow and trying to buy low and sell high. That is day trading, and that is not what we are doing. As a beginner, trying to guess which stock will go up tomorrow is one of the fastest ways to lose money. You don't need to outsmart the market. You just need to understand one simple idea. Investing simply means putting your money into something that can grow in value over time. You can invest in individual companies through stocks, which means you own a piece of a single company like Apple or Microsoft. You can invest in hundreds of companies at once through ETFs or index funds. You can also invest in bonds, which is more like lending money to the government or company in return for interest. Or even you can invest in real estate. Now, hearing all of these might make investing sound difficult, but here is the good news. You don't need to invest in all of them. Our goal is much simpler. We are going to buy small pieces of great businesses that have a long history of growing over time through diversified investment. Then keep adding money consistently and give our investment time to grow. Now, think of it like planting a tree. You don't dig it up every week to check the roots if they've started growing. You water it, you give it time, and let it grow on its own. Investing works the same way. You invest regularly, stay patient, and let compound growth work in the background while you go on with your life. So now that you know how we invest, the next step is, what should you actually buy? Which investment should you put your money into? Now, a lot of people jump into buying Apple, Tesla, or Microsoft because they use the products every day. But that is actually one of the riskiest ways to start investing. If you put, let's say, 500 euros into one company and that company has a bad year, get hit with a major lawsuit, or even goes bankrupt, that your money goes down with it because you are putting all your egg into one basket. And on top of that, picking individual stocks takes a lot of work. You have to read financial reports, follow company news, and constantly try to predict which business will be the next winner. I bet you don't have to do that, and trust me, you shouldn't have to. So if I were starting from zero today, here's exactly what I would do. I will keep it very simple. Rather than trying to guess which companies would perform best, I will buy a low-cost ETF that tracks the whole market, something like the S&P 500, which covers 500 of the biggest companies in the US. Now, if you are in the US, a solid example is the Vanguard S&P 500 ETF with the ticker VOO. Now, if you are here in Europe, regulation prevents you from easily buying VOO. So a good match is iShares S&P 500 ETF with the ticker SXRO8, which trades in Euro. And if you are in the UK, a great option is the Vanguard fund with the ticker VUAG. Now, picking the version made for your own region matters because it trades in your own currency. So you are not losing money to currency conversion fees every time you buy or sell. Now, why does this ETF work so well? Because instead of betting on one company, you are investing in hundreds of the biggest companies at once. Now, think of it like buying a shopping basket that contains dozens of different fruits instead of just buying one apple fruit. One investment gives you exposure to companies like Apple, Microsoft, Amazon, and hundreds of others. If one company has a bad year, the others help balance things out. That is called diversification, and it's one of the biggest reasons ETFs are such a great place for beginners to start. Now, a quick favor before we keep going. If this video is actually helping, hit subscribe, tap like, and comment the biggest investment challenges you are currently facing. And if you know someone who is about to start investing, send them this video. It could save them from making a costly mistake. So now that you know what to buy, where do you actually buy this ETF? Now, to invest in this ETF, you need a brokerage account. Think of it as a secure supermarket for investment. It's the app that connects your bank account to the stock market so you can buy and own investments. There are hundreds of investing apps out there. But just like you wouldn't buy food from an unlicensed street vendor, you shouldn't put your money into sketchy trading apps that promise quick returns. So when choosing your investing platform, there are two major things you need to check out. Firstly, is it safe? Make sure it is licensed and regulated in your own country or region. That way, even if the company itself runs into trouble, your investment still legally belongs to you. Secondly, what does it actually cost? So avoid platform charging you every time you invest or expensive annual management fees. They might look small today, but over 20 or 30 years, they can quietly eat away thousands of euros of your returns. Now, if you are in the US, brokers like Fidelity, Charles Schwab, and Vanguard are great choices. If you are in the UK, platforms like Trading 212, AJ Bell, and Hargreaves Lansdown are well established and widely used. Now, if you are in Europe, Trading 212 is one of the easier platforms for complete beginners. And also we have Scalable Capital or Hero are also solid depending on where you live. At the end of the day, what matters is a regulated broker with low fees and showing up consistently. Now, let's pull everything together and actually buy our first investment. So I'm going to use Trading 212 for this example since it's beginner friendly and available across Europe and the UK. But if you are using another app, the steps are almost identical. So once you are logged in, you might see on your screen traded stocks and biggest gainers and losers. So ignore all of that. As a long-term investor, the search bar is your best friend. And by the way, this is just an account I use for demonstration. And if you ever want to compare ETFs first, a great free site is Just ETF. It lets you look through thousands of options available to European investors. But for this example, let's search for the iShare Core S&P 500 ETF with the ticker SXR8. Now think of a ticker symbol like a unique ID code or like an airport code. Just like typing LHR gets you to London Heathrow and not a different airport in London. Typing SXR8 ensures you buy this exact iShares fund and nothing else. So type SXR8 into the search bar, then select it and tap buy. Don't worry if you are seeing full shares cost about 700 euros. Most brokers let you buy a fraction of a share. So instead of buying a full share, you could just invest 50 euros or 100 euros, whatever fits your budget right now. So review the order, confirm it, and that is it. Now, in a few seconds, you now own a small piece of hundreds of the biggest companies in the US. Now, here is a very important thing beginners make mistakes with. When you transfer your money from your bank account to the app, that money sits as uninvested cash. It's not invested yet until you actually search the ETF and complete the purchase just like we did. So make sure you don't just deposit the cash and have it sitting there. So now here is your one next step from this video. Open an account with a regulated platform, search for one of the ETFs we just covered and make your first purchase. Even if it is just 50 euros, that's the whole barrier broken. Now, there is one more thing to watch out for. Two ETFs can look almost identical, but come with very different fees and tax setups. And picking the wrong version can quietly cost you money. So how do you make sure you are buying the right one? I've made a full video on the exact 4 things to check before you hit buy, and it's right here on the screen.